So for those of you who are tuning in live with us on Facebook or YouTube, I just want to remind you what we are doing here today. We are doing a free business training. Arthur Anderson, who is going to be our expert facilitator today, is going to talk about how to protect your small business from the unexpected. So here are some things that we're going to discuss in this training. We're going to discuss what a buy-sell agreement is and why it's important for the business community, who benefits from a buy-sell agreement and who's involved. Also, when you should establish a buy-sell agreement. So now that I have done that piece of just re-engaging what we're talking about today, Alan, I'm going to go ahead and let you take the mic and share your screen and do the presentation.
Right. All right, Christina, give me a quick thumbs up or yes if you could see the presentation.
Yes, I can see it just fine.
All right, great. So protect your small business from the unexpected. All right, so today we're going to talk about the buy-sell agreement. All right, I feel that a lot of times people don't listen or care about what you say until they know who you are. So I just wanted to talk a little bit more about myself before we get into the main material. So I have the Anderson ACE system. You can go to my website to check out more about that, but ACE stands for accumulating, consolidating, and endowing. It's how I describe the wealth management life cycle. During the accumulating stage, individuals are trying to earn as much income as possible. During the consolidating stage, they're bringing everything together, making sure that they understand where everything is. They're starting to reduce their risk so that they can have a comfortable retirement. And then the endowing stage, that's when you're winding down. Some people don't believe in retirement, but you may want to work at a slower pace, enjoy more vacations, traveling, being out in nature. You want to do something with all of the wealth that you've accumulated, and that's when you start figuring out ways to pass that on, leave a legacy. So that is the wealth management life cycle that I've described as the Anderson ACE system. And if you want to learn more, I'll have my contact information at the end where you can reach out to me. But my website is on the screen right now. All right. So what we're going to cover today, as Christina mentioned, we're going to talk about the buy-sell agreement, what it is, why it's important. We're going to talk about who benefits, how it is funded, and also we're going to talk about when is the best time to establish that buy-sell agreement. All right, so begin with the end in mind. All right, business continuity planning helps protect against unforeseen events that could impair the ability of an owner. Succession planning facilitates an orderly transition if a shareholder, owner, or business partner were to retire, become disabled, or pass away. If any of these events occur, a buy-sell agreement would be helpful. Now, picture this. If you had a dependable, heavily relied on partner who's been in the industry for numerous years and they died unexpectedly, what would you do? So just keep that in mind as we go through the presentation. All right, what is a buy-sell agreement? All right, a buy-sell agreement is a contract. It governs what happens when one owner or shareholder is to leave. So it also defines the business interest. A buy-sell agreement provides a mechanism for partners to buy each other's share of the business. So if Christina and I were in business and I were to die, you may think, well, Christina can't buy me out because I'm dead. Um, when I die, my wife inherits my assets. So, i.e., my half of the business will go to my wife. Christina doesn't want to be in business with my wife. So, a buy sell agreement allows her to pay my wife for my share of the business, and then Christina owns the business outright. So, who benefits from a buy sell agreement, and who are the parties involved? Well, everyone benefits from a buy sell agreement. The business, they get their company evaluated, so they know exactly how much the business is worth, exactly how the business is divided amongst the owners. The owner's interest is established at that point or before, and then it eliminates transfer to undesirable parties. So as I mentioned, Christina doesn't want to be in business with my wife. So it's going to eliminate that by having it in place how Christina will then become full owner of the business. Now, all of the owners benefit because they have an instant market for their share of the business. Right off the bat, they know who's going to buy them out. It facilitates an orderly transfer, so there's no arguments and lawsuits or anything like that. And in the case of a deceased partner, the family is compensated, so they're not at a loss either. 6 out of 10 business owners are unaware that without a defined plan, the state could determine the future of their business. How buy-sell plans funded with life insurance work. All right, so there's 2 ways to fund the buy-sell agreement with life insurance. There's the entity-owned way and the cross-purchase plan way. Entity-owned basically means that the company itself pays for the life insurance to cover each of the owners. That is used the least. More common is the cross-purchase plan. And so what that is each owner has an agreement that their business interests will be exchanged directly with the other owners identified. And then at their death, the life insurance proceeds are directly paid to the surviving owners so that they can then buy out the family that inherited that share. Each owner is paying for the life insurance of the other owner in order to make that work. Now, because life insurance has unique advantages such as immediate cash available to purchase, it's an excellent choice for funding a buy-sell agreement. A quick side note of the ins and outs of insurance is that the older you are, the higher the cost of insurance. So attorneys need to put verbiage in the contract to make the premiums fair to all parties involved in regards to age, because if one partner is 20 years old and another partner is 50 years old, that 20-year-old is paying higher premiums to insure the 50-year-old. So that's when you want to have the attorney involved to make sure everything's fair. Oops, went too far. All right, the average cost of replacing a highly educated executive position is up to 213% of the person's annual salary. So keep that in mind, because the cousin to a buy-sell agreement is key man insurance, and that's also similarly drawn up with the help of a business attorney and your financial advisor. So I just wanted to make sure you are aware of that as well. All right. When should you establish a buy-sell agreement? All right, so that is what I hear most often. People are always asking me, well, when should I do it? I'm just starting my business. I don't think now's the time. When should I do it? Well, now is the time. Maybe you didn't uh, get the agreement in place when you first started the business, but things happen and you want to be prepared for the unexpected. It's never too late, so you want to look into it now. It's important that you do it as soon as possible. Businesses must consider dissolution with partners in the beginning before any tension arises. There needs to be an attorney to draft the contract, and of course, your financial planner to help determine how to fund it. Another time to consider a buy sell agreement is at the time in which your estate cannot afford to purchase your share of the business, cannot afford to purchase the business. Now, when you look at your estate's net worth and determining whether they could purchase the business, you want to do that without the value of the business when you calculate that. And then if your share of the business is valued over $11 million, you may want to consider life insurance on yourself to allow your beneficiaries to cover the estate tax to be paid when inheriting the value of your business. All right, I think I went rather fast. I made it to the conclusion slide already. All right, so I'm gonna toss that up to my being an introvert. I was trying to get through this as quick as possible. But what I want you to keep in mind is that each business owner and their respective families benefit from business succession and continuity. Business succession can be facilitated through a buy-sell agreement. Buy-sell agreement can be funded with life insurance. And your trusted financial advisor, along with the business attorney, can assist you in creating a buy-sell agreement. Now, I want to open it up to Q&A. And while we do Q&A, I have my contact information up on the screen. And Christina, did we open up the social media to see if there's any questions? And Alan, feel free to come off mute and ask any questions.
Yeah, no, that was like really straightforward. I just, I like to get the recording or maybe the slides just to kind of refresh myself. But no, I definitely would be interested in following up with you more about that, to get a little bit more detail about my specific situation.
Okay, great.
I do have it open on YouTube. It did not connect to Facebook, so it's not streaming on Facebook. But I would like for you to talk a little bit more about your specific, it was the Arthur Anderson, way of doing things.
Okay.
If you can maybe explain that a little bit more. And then also, I think you made it really clear the importance of the agreement, like more information, but is this something where do you establish this? Because I guess even if, say you don't know the value of your business to even know how to put a number on something like a buy sell agreement, or to be able to price what that looks like. So how do you maybe begin preparing yourself to do something like this? Or what are some of those tangible steps that we can be taking on our own to make sure we're prepared to work with a person like you and our attorney to get this together?
Okay, so the keys are having the financial advisor and having an attorney to help you with all of the contracts. Besides that, to get prepared, you would want to make sure that you're keeping accurate accounts of your finances for the business. So you may want to have a CPA involved. Hopefully you have some sort of accountant or bookkeeper or tax software to help you out with your business. But if you have a CPA, they'll be able to help you have all of the financial data to put towards determining your business valuation. So that would be the key starting point to having that information available.
So does that mean you do need to have revenue in order to determine this, to get this type of data to be prepared for a buy-sell agreement? Like, are there, let's say, eligibility requirements that make you ready to move into this? Or is it literally just anybody can get a buy-sell agreement?
So pretty much anybody, but the amount that you need to fund it will be determined by where you are in your business. So there are, let's say your business is 10 or 20 years old and it's worth $20 million. Well, it wasn't worth $20 million 20 years ago. So if you establish your buy-sell agreement in the beginning, you maybe valued your business maybe at $1 million or something. And so it may not be adequately funded for the business 20 years later. And so you can establish the buy-sell agreement early at a lower valuation, but you want to get your business evaluated so you have that valuation annually so that you make sure that you do have enough coverage for the funding of the buy-sell agreement.
So when you say the funding of the buy-sell agreement, you're talking about the tangible assets that's being bought and sold, or are you talking about to fund the actual process of a buy-sell agreement?
So I'm talking about to fund the process of a buy-sell agreement. So that is through the use of life insurance. And so life insurance, it'll pay out at the event that the buy-sell agreement establishes, so that it pays the other party involved to buy out the share of the leaving owner.
So how much does that typically cost a person to do a buy-sell agreement?
So it varies. Depending on, so there's a lot of variables. So the main variable is the value of the business. And then your percent share of the business, because not every business partner or business owner has an equal share. So maybe if you have a 30% share of the business, then only 30% of this value needs to go to fund your interest of the business. And so once that number is determined on each owner, then we could find out the premium cost for the life insurance to get that much coverage in life insurance.
Interesting. Alan, you can definitely jump in with any questions that you have, if you do have any.
No, I think it's pretty straightforward. It's something that like I never considered. Like I've considered key person insurance, but not what he's talking about here. So I would just like to see how it would pencil out for my company.
Yeah.
Okay.
So you all can definitely talk offline about that. Well, I don't have any other just general questions. I don't see any questions in the YouTube chat. I'm really sad that it did not connect to Facebook. Like it's still buffering on the Restream side. So that's unfortunate. But I'm going to share it, share the link on Facebook. And so if there are questions that come from that, I'll definitely shoot those over to you, Arthur.
Yes, please do.
We have your contact page up here. So make sure you all get your free consultation and get more information. It was very straightforward. So you should have a better grasp about a buy-sell agreement. And like Arthur said, it's never too early to do it, but it can be too late. Hello? So definitely take advantage of this resource and knowledge that we have here in Arthur. Did you want to say any closing or parting words before we cut out of here?
Yeah. So thank you so much, Christina, for allowing me to present this material and educate everyone on the buy-sell agreement. And it was definitely a pleasure to be able to speak to everyone today. besides buy-sell agreements as a financial planner, I'm sorry, you did ask me to speak a little more about my ACE system. So as a financial planner, I help people through my ACE system. So accumulating, consolidating, and endowing. And I believe everything flows through that. So even this buy-sell agreement, if you look at yourself in the sense that this buy-sell agreement protects your family from losing out on any potential harm that could come from the business if you were to pass away, or if your partner were to pass away. And so this is more of the consolidating and endowing stage of the wealth management cycle. So you're bringing everything together, you're reducing your risk, and then you're looking at legacy. How do you pass things on? And so everything as you accumulate wealth falls into one of those three buckets. And so that's why I came up with this ACE system. I believe everything flows through that. And if we focus on that, we could accumulate, consolidate, and endow generational wealth.
Mm.
So just wanted to, let everybody know that, and they could reach out to me, and I would love to help. I really love helping people in our community because there has been in the past a lack of resources, and I like to bridge that gap.
Awesome. Well, we appreciate the work you're doing, Arthur. We appreciate you sharing your time and knowledge and information with us. I'm going to make sure to have all of Alan's contact information in the description box, so you'll be able to have direct links to his email, his phone number, for you to, again, take advantage and take advantage of the free consultation that he offers. Ask the questions that you have specific to your business, and just don't feel like you got to keep doing these type of things on your own, and just kind of figuring it out. There are expert advisors out there who can give you the guidance that you're looking for. So Alan and Arthur, I appreciate you both again for joining me live this evening. I hope information was helpful for you all, and we will be back again next month with another training.
All right, sounds good. Thanks, you too. I appreciate it. Looking forward to hearing back from you, Arthur, and also being at that training next month. Thank you so much.
Awesome. Thank you all so much. Have a wonderful evening.
You too.